What's up, traders? So today I'm going to show you the 3 stocks that I will be trading in 2025 in order to bring in an additional $300,000. And on top of that, I'll show you the exact option strategies I'll use for each one and the framework I'll be using in order to get the highest probability of profit on each trade. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader. I bring in multiple 6 figures per year from the stock market, and I use options trading in order to provide for my entire family. Now, make sure you stay till the end of the video because the last stock I'll show you, I'll probably be making the majority of my money from. But before I show you the first stock, sometimes I like to stop and just sit back and think about how good God has been for me. Before I started recording this video here, I was thinking about just 9 short years ago, I was working a job where I made $10 per hour. I was working in the autism field and I absolutely love the job because I love making an impact on people. I love helping people and I think that's what I'm here to do. It's just the paycheck didn't really reflect the impact I was making. And so my 2-week checks would be, after tax, a total of about $650. And so I was literally just sitting back and thinking that over a course of 80 hours of work, I would make about $650. And now I make nearly 2 to 3 times that every single day from the stock market. It's just the impact that trading can make on you. It could quite literally change your life because I know it did that for me. But that was just a little moment I was having. Don't mean to bore you with my story. Let's get down to business. So the first stock I'll be trading in 2025 and bringing in over 6 figures from by itself is ticker symbol TSLL. Now, TSLL is a leveraged ETF to Tesla. Now, if you're not familiar with leveraged ETFs, they simply look to move 2 or 3 times more than the stock or the sector that it follows. So for example, for TSLL, since it follows Tesla, if Tesla moves up 1% for the day, TSLL will look to move up 2% for the day since it is a 2x leveraged ETF. And the same is in reverse. If Tesla were to move down 1% for the day, TSLL will look to move down 2% for the day. Well, you may ask, why would you want that? Well, I am an option seller, and the more volatile a stock is, the higher the premiums are that I receive. Okay, but we have TSLL here. We can see that the ETF has $7 billion under management, so it's not a small ETF by any means. But here's the most important thing here. Look at implied volatility. It's currently 147%, so that is very, very high. And that is kind of what you want when you're selling contracts. And so the option strategy that I will use on TSLL specifically is the will strategy. Now, if you're new to options, the will strategy is simply when you sell a put in order to buy a stock at a cheaper price and get paid for it. And then later you sell a call in order to sell a stock at a higher price and you get paid for it. So you can see here, first you'll sell a put and you'll collect the premium, and you can continue doing that step over and over and over again until you get assigned the shares, aka you have to buy the shares. But then once you have the shares, you can then sell a covered call in order to sell the stock at a higher price. And for doing that, you can collect premium, and you can do that step over and over and over again as well until the shares are taken away from you. And I make this analogy all the time, but selling a put is very much just like car insurance. If you have a car, I'm assuming and hoping that you have car insurance, you probably pay them a premium every single month. And the reason you pay them is just in case you were to crash your car. But 99.9% of every single month, you don't crash your car. But you continue paying the car insurance for that very slim chance that you do. Well, that's what selling a put is. But in this case, you are the insurance company. So essentially, a put buyer is scared that their stock might crash. So you as the put seller go, hey, I'll give you some insurance on it, and I'll buy the shares from you if the stock were to drop, aka crash. But in order to do that, you got to pay me up front right here, right now. And just like you very rarely crash your car, well, if you're selling puts on a very high quality company, it's very unlikely that the stock will go beyond your strike price. So you as the put seller could just keep your money every single month, just like the car insurance keeps your money every single month. But now that we've covered that, let's take at TSLL's options chain. All right, so now I pulled up TSLL in the options chain, and the first thing we need to do is select an expiration date. Now, I always select expiration dates within 45 days. And the reason for that is an options premium starts to depreciate the most once it gets within 45 days. So as option sellers, we want to collect the premium when the time value is high, and then we want to get out of the trade when the time value is low. And so I stay within 45 days. Now, that doesn't mean you have to go 45 days out. You just need to be within 45 days. So you may do 30 days, 15. That is all fine, but just make sure you're within 45 days. So we'll come down here and I'm going to select the expiration date that is 31 days out from now. So I'll go ahead and select it. And the first thing I want to look at is the delta. So if we come over here to this column here, you can see it says delta. Delta helps you determine the probability of an event occurring. So if we come down here to this strike here, you can see it says 0.02. So if it has a delta of 0.02, that means that there is a 2% chance that TSLL stock price drops down to that strike price by that expiration date. Or in other words, you have a 98% probability of profit if you were to sell a put at that strike right here, right now. Now, I personally like to be at a delta of 0.20 or lower. All right, so if we scroll down, we can see right here at this $30.70 strike, it is a delta of 0.21. So I want to stay at a delta of 0.20 or lower, so I would essentially select any of these strikes that are lower than that one there. Now, the second thing I want to look at is the expected move. Now, the expected move is just the move that the option market has priced in for that stock at this time for that specific expiration date. So if we come over here to the right, you can see right here it shows a plus, minus, and then a number. That is the expected move. And you can see that every single date has its own number. And so this date, the expiration date that we're currently looking at, has a expected move of $14.84. So what we want to do is subtract that number from TSLL's current stock price in order to give us the highest probability of profit. All right, so we'll subtract that $14 from TSLL's current stock price of $39, and that puts us at $25. So if I come back over here, I want to be around $25, which is well below a 0.20 delta. So I would be fine selling puts at this strike of $25.70. And so to go ahead and open this trade, I'll go ahead and right click, hit sell, go to single, and we can see the mid price is around $1.29. So we will receive $129 per contract that we sell of TSLL right here, right now. So now I need to select how many contracts I would like. For this, I'll probably do about 10 contracts. Now, when you're selecting the amount of contracts that you want to open, the best way to go about it would be for you to have the amount of money that you would need in order to purchase that amount of shares. So every contract is worth 100 shares. If I'm doing 10 contracts, then I would want to be ready to buy 1,000 shares of TSLL if the stock price were to drop. Now, if you don't have that amount of money and you still want to open up this trade, you can. Just know that if the stock price drops, you may need to close the trade at a loss. All right, so I'm all set and I'll go ahead and hit confirm. And as you can see here, when I open up this trade, I'll get $1,290 up front right here, right now. Now, right underneath, you'll see also the max loss. So right now, the max loss would be $24,410. However, I don't want that number to scare you because that is showing the amount that I would lose if Tesla were to drop to $0 while I had this trade open. And we all know the chances of Tesla going to zero in the near future is probably slim to none. So I will go ahead and open up this trade and receive my $1,290. Now, once the trade is open, I typically close the trade once I am up anywhere between 50 and 80%. And so although I opened up a trade for an expiration of 31 days out from today, if TSLL stock price goes up as it's been doing over the last few months, you'll be able to close out for that profit much sooner. As of late, I've been closing out these contracts in 4 to 5 days. But that's the first stock, TSLL, and I absolutely love Tesla. I bought myself a Tesla Model S a few years ago as a birthday gift to myself. And at the time of purchase, it was a $90,000 car. But what's crazy is I make more from Tesla stock alone every single year than the price I paid for that car. So I kind of feel like Elon gave me a free car. I don't know, that's just my way of thinking. But another way to earn 7 to 9% on your money monthly is by owning your own business. And that's where today's sponsors, Limits Express Company, comes in. They will completely manage an Amazon store for you selling products like Colgate, toothpaste, Crest mouthwash, Dove soap, and many more. Limits Express will handle everything from product sourcing to customer service, allowing you to earn 100% passive income. To secure the best prices and maximize profits, Limits Express needs to purchase large quantities of inventory. They achieve this by pulling funds from their clients, which enables them to place bulk orders with suppliers at significantly discounted prices. And this is why I love this company. This model ensures that Limits Express success is directly tied to your success. They only make money when you do. Your role is to provide the necessary capital for inventory, and in return, Limits Express does all the rest. It's like a collaborative partnership where you share the profits, but the workload is put on the experienced professionals. Listen, I love the stock market, but if you invest in the S&P 500, you'll average about a 10% annual return. With this Amazon business, you can get nearly the same amount monthly while still being totally hands-off. If you're interested in making passive income on Amazon, use the link below to book a 30-minute Zoom call directly with one of their co-founders, Kyle. He will explain everything to you so you can see if it's a great fit for you. The link is in the description below. The second stock that I'll be trading in 2025 and bringing in over 6 figures from is ticker symbol BITX. Now, this is a leveraged ETF that follows Bitcoin. And unless you've been living under a rock, I don't think I need to tell you that things have changed recently for cryptocurrency. With a new presidential administration coming in very soon, they are very, very bullish on crypto, and that has kind of changed things. Now, I'll be the first to tell you that I was never a crypto fan prior to what's happening now. And the reason for that is I've previously owned restaurants, so I know about looking at a cash flow statement, a balance sheet, and an income statement. And I know how to value a company based off of those numbers. Well, with Bitcoin, you can't really do that. What it's worth is really just dependent on what the next person thinks it's worth. And so because of that fact alone, I was not a crypto fan. However, now the fundamentals have changed. And now that I can foresee a ton of money being made, well, you can always find me where the money is. So, ticker symbol BITX. It is a 2x leverage ETF to Bitcoin. And there are a few of these ETFs now. However, BITX is my favorite one. So if we come down, we can see that it has about $4 billion in assets under management. But this is what I want you to look at right here. Implied volatility at 118%. So I just want to show you, if we look at ticker symbol IBIT, which is the most popular ETF that follows Bitcoin, we can see that it has an implied volatility of about 60%. So you can see that BITX has about twice the implied volatility that IBIT has, which means when we sell contracts on it, we will get about 2 times the amount of money. All right, so let's go to BITX's options chain. And for this ETF in particular, I'm going to do the wheel strategy as well. So of course, with the wheel strategy, we want to start with selling a put. So I want to select the exact same expiration that we just did for TSLL. We'll go 31 days out. And again, if I scroll down, I want to select a delta of less than 0.20. So it looks like at the $57 strike, that would be a delta of 0.20. Now we need to look at the expected move. So the expected move is currently $21.59 for this expiration date. So we can just subtract that from the current stock price, which is $71.30. So that'll put us at about a strike of $50. So I'll come back over here to the right, and I want to be below a strike of $50. So I think that this $49 strike here looks great. We'll receive anywhere between $160 to $190 per contract that we opened. Now, if you're someone that is super bullish on Bitcoin, well, you can select a more aggressive strike. You can select a strike that is closer to the money. I mean, even if I went all the way down to the delta of 0.20, that would give me about $320 to $370 per contract. That is an amazing amount of money. Now, if you're very bullish on Bitcoin and you do think that it's going to continue to go up from here, then why not be more aggressive with your strike price? Because even at a delta of 0.20, you still have an 80% probability of profit. And let me show you your return if you were to make this trade. So to get your rate of return, you'll take the money at risk, which is $57, and you'll divide it by the money you're receiving, which in this case at 57 will get anywhere between 320 to 370. So let's pick the mid price. Let's say $345 is what we'll receive. So we'll divide it by the 345, and that'll get you 16%, which is an amazing return within and of itself. However, now we need to annualize it. Now we know the expiration date was 31 days out, so that's roughly a month, and we know that there's 12 months in every year, so we can just go ahead and times that by 12, and then we'll multiply this number to get our percentage. That's a 198% return on your money annualized. There's not very many things where you can get a return like that, right? If you can continuously get a 198% return every single year, you'll likely be one of the richest people in the world in a few decades. But let's say over the course of this trade, Bitcoin's price comes down and it drops below your strike price by the expiration date. Well, in that case, you'll be assigned the shares, which simply means you buy the shares at the strike price that you agreed upon. So in the example we just did, you would buy 100 shares of BITX at $57. Well, once you have the shares, you could turn around and immediately sell a covered call to complete your wheel strategy. And that's where the even bigger money can be made. And let me show you how. So we see the stock is currently trading at around $70. So let's say in the past sometime you sold a put at $71 and the contract was going to expire today and the stock price is under $71. So you will have to buy the shares at the $71 strike. That's fine. Now we can turn around and immediately sell our covered call. Now, when selecting a strike for the covered call, well, you have a little bit more leeway with that, just depending on how quickly you want to get rid of the shares. Now, let's say I wanted to get rid of the shares as quickly as possible. Well, I would probably just come over and sell a covered call at the $71 strike. I bought the shares at $71. Now let me go ahead and sell the shares at $71. But for doing that, I would get paid $900 to $930 per contract. And for me personally, that's good enough right there. However, let's say we're very bullish on Bitcoin and we do think that it's going to go up in the near term future. Well, what I could do is, let's say we'll sell a covered call at, let's say, $90. All right, so we can see that we will receive $380 to $480 for selling that call right here, right now. However, that's just the premium for the contract. We will also get the appreciation of the stock going up as well. Now I'm over here at the Analyze tab, and if you pay attention to this blue line here, and then pay attention to the number that this blue line shows at the bottom, you can see that as Bitcoin stock price goes up, you make more and more money, and you can make money all the way up to that strike price that we selected, which was $90. And from there, our profits max out at what looks like $2,410 per contract. And that is why the wheel strategy is so powerful. But that brings me to my third stock, and that stock is MicroStrategy, ticker symbol MSTR. Now, MicroStrategy has been one of my favorite stocks to trade over the last few months. If you are in my community, then you know that you've made a killing from it. Because I post all my trades in there, and you've just been following my trades, so you've made a ton of money. But the reason I love trading MicroStrategy is also because of the implied volatility. If we scroll down, we can see that implied volatility is 101% still, even though the stock price has been consolidating over the last several weeks. So this is MicroStrategy's chart here, and you can see right after the election, it shot right up, and then it gave some of those gains back, and it's been consolidating in this area here over the last several weeks. And that's like an option seller's dream. With implied volatility way up here, but the stock price is trading within a range, man, it's almost easy money. For this stock in particular, what I'm doing is I'm selling puts on it. Here's the thing, when a stock goes parabolic and goes straight up in a very short period of time, you'll often find that it gives back those gains in a short period of time as well. So when I'm selling puts on this stock in particular, I want to sell puts at a price that it was prior to this parabolic run up. Okay, so if we come down here, we can see the parabolic run up started at around 250. So I would be comfortable selling puts at 250 or lower for this stock. So let's head back over to the options chain, and now I'll put in ticker symbol MSTR. So I went ahead and put up the exact same expiration that we did for the other two stocks. And like I said before, I'm cool with selling puts at or below the strike of $250. And if we look here, the strike of 250 definitely fits into our parameters of a delta of less than 0.20. It's currently at 0.06. And now if we look at the expected move, it's currently expected to be about $115. And if we subtract that 115 from 393, we'll get about $278. So the strike of 250 fits our criteria perfectly. However, with this stock in particular, I want to be even more conservative. So instead of selling puts at 250, I personally like to go under a delta of 0.03 for this specific stock. One, because it's so volatile, and two, because the premiums are so good, I'm still going to make a ton of money while doing so. So it looks like the strike of 205 will get me to about a delta of 0.03. And from that, I'll make anywhere between $214 and $238 right here, right now. But with this stock in particular, I like to select shorter expiration dates. So instead of going 31 days out from now, let's say I want to go about 17 days out from now. So I'll select the date. I'll come down and I'll look for the delta of 0.03 for this stock. And that'll put me at a strike of $235. And it'll give me anywhere between $170 and $187 for this 17-day trade. Now, as of recently, the time value on MicroStrategy's contracts has been depreciating so quickly, I've been able to get in and out of trades at anywhere between 3 to 5 days and getting anywhere between 50 and 80% profits. And that is hard to beat. But those are 3 stocks that I'll be trading in 2025. If you'd like to learn more from me, come join the Trader Freedom community. Not only will you see my exact trades in real time, but it also comes with a full options course from A to Z, and you'll be able to see my entire options framework that I use to bring in multiple 6 figures per year. And the link is in the description below. But that's it for this video. I'll see you guys in the next one. Peace!